Happy Friday, everyone. Thanks for joining us today. I'm Ji Myung-gil in Seoul. Coming up on today's edition of Business Daily. The secondary Kosdaq market surged to an all-time high of 800 points today as pharmaceuticals and bio stocks continue to soar, but experts warn the surge could be short-lived. Korea's November Consumer Sentiment Index jumped to a near 7-year high on an improved economic outlook and easing geopolitical tensions. Stay tuned for these stories and more. We start things off with a look at how the markets fared today. The tech-heavy Kosdaq surpassed the 800-point milestone in intraday trading, its highest level in 10 years. For more, we have our Lee Ju-young on the line. Ju-young, fill us in.
Hi, Myung-gil. Like you said, the junior Kosdaq moved above 800 points for the first time in a decade. The Kosdaq has seen a significant rise this month in particular, rising about 15% from the 690-point level seen in the beginning of November. However, it surrendered some of its gains as the market drew to a close and ended roughly 0.5% lower at 792.74. Meanwhile, the benchmark Kospi edged up, closing 0.28% higher at 2544.33. The exchange rate held below the 1,100 won mark for the past 7 days, ending the day at 1,085.41 against the dollar. The Kospi showed little movement on Friday, with large-cap stocks trading mixed across the board. Market bellwether Samsung Electronics rose nearly 0.3%, while chipmaker SK Hynix also saw a rise of roughly 0.5%. Top steelmaker POSCO shares were flat. Experts say the trading volume itself was low on Friday as the U.S. stock market closed due to the Thanksgiving holiday.
Now, Ju-young, the Kosdaq going over 800 is quite a feat. What was seen as the driving force behind its rise?
Heavy buying from foreign investors and institutions were seen as the key factors. Foreign investors bought over $460 million worth of shares this month as of Thursday, while institutions bought a whopping $1.1 billion worth of shares during the same period. The surge in IT and retail stocks also helped, with the communications equipment sector up 1.84%, while the broadcast and entertainment sector saw a 2.5% rise. This has been Lee Ju-young for Business Daily.
Now moving on, Korea's Consumer Sentiment Index, a key indicator of future domestic consumption, has risen to its highest level in almost 7 years. November's index also shows people are expecting the real estate market to cool down and the Bank of Korea to raise interest rates. Our Kim Ji-yeon starts us off.
Consumer sentiment reached its highest level in more than 6 years and 11 months in November as relations between South Korea and China improved and geopolitical risks stemming from North Korean threats waned. Data by the Bank of Korea shows the composite consumer sentiment index has risen by more than 3 points from the previous month to 112.3. The index jumped during the February to July period on high expectations after a newly elected government, but dropped for 2 consecutive months leading up to September on rising North Korean provocations. A reading above 100 means more people are optimistic than pessimistic about the economy. The same data showed less people expect the strong upward trend in real estate prices to continue, mainly due to government measures unveiled earlier this year to curb housing speculation. It was the first time since July that consumer sentiment on real estate prices dropped, falling to 106, down 4 points from the previous month. Expectations on rises in household incomes stayed the same as the previous month at 104, while job prospects rose for the first time in 5 months. Expectations of an interest rate hike reached their highest level since July 2011 in anticipation that the Bank of Korea will raise the main benchmark interest rate later this month from the current record low of 1.25%.
There was a dissenter who called for an interest rate hike in last month's BOK Monetary Policy Committee, and robust Q3 growth on the back of surging exports could provide support for such a move.
The expert added, however, that since a rate hike would put more burden on households in repaying their debt, he projected that the BOK will be more cautious in raising the interest rate next year. Kim Ji-yeon, Business Daily.
Korea's export volume fell last month for the first time in a year as the number of working days fell due to the long Chuseok holiday. The Bank of Korea's export volume index for October came to 133.6, down 1.9% compared to a year earlier. With 4.5 less working days in the month compared to last year, the volume drop comes as no surprise, but export prices rose over the same period, indicating growing value for Korea's exports. Due to the nature of the semiconductor production process, in which operations are difficult to stop, chip exports surged 30.2% a month. Korea's economy grew 1.4% in the third quarter, the fastest rate in 7 years, with semiconductor exports leading the drive. Our Kim Hae-sung gives us a more detailed breakdown of the numbers and what lies ahead for the chip industry.
Samsung Electronics and SK Hynix both posted record earnings in the third quarter thanks to a boom in semiconductors. The two Korean tech giant semiconductor exports are expected to reach $90 billion for this year, accounting for 16% of the nation's total exports.
Prices of DRAM and NAND flash, the two main memory chip products, have doubled on year as global demand exceeded supply, which has been flat since 2015. We've entered a supercycle, leaving more profits for the world's three main chip makers, Samsung, SK Hynix, and Micron Technology, who make margins of around 50% on their chips.
The global semiconductor industry is expected to top $400 billion for the first time ever this year. And with demand for smartphones and cloud servers still rising, the global demand for DRAM and NAND flash memory is expected to outpace supply, and according to IHS Markit, the boom is forecast to continue until 2018. To maintain its lead in the game, Samsung Electronics announced in July that it'll invest $27.6 billion in semiconductors this year alone, doubling from last year's. SK Hynix also raised its investment to over $9 billion to expand its production line. But at the same time, China, which consumes more than 60% of the world's semiconductors, is investing more than $100 billion to become a global semiconductor power by 2025. It'll likely start producing its own memory chips by the end of 2018 and could upend the supercycle.
Investment in non-memory chips, shifting from processed mass production to diversified small quantity production, will be critical for Korean companies. The fourth industrial revolution is expected to drive demand for non-memory chips that are used for artificial intelligence and Internet of Things. Recruiting talented engineers will also be important.
2017 marked a record year for semiconductor giants. While cashing in on the supercycle boom, a sophisticated long-term strategy will determine whether Korean companies can keep their #1 spot in this technology-intensive industry. Kim Hae-sung, Business Daily.
President Moon Jae-in has paid a surprise visit to the country's southeastern city of Pohang, which was hit by a 5.4 magnitude earthquake last week. He started off by visiting a local high school and then met a group of high school seniors who took their college entrance exams on Thursday after a one-week delay. President Moon also visited one of the local gymnasiums where thousands of people who are forced to leave their homes have been staying since last week. China's Commerce Ministry has levied anti-dumping duties on Korea's exports of MIBK, a compound widely used in coatings, pesticides, and solvents. In the ministry's preliminary ruling on Tuesday, Korean firm Kumho P&B was hit with a 30% tariff rate. Japanese firms were also hit with tariffs ranging from 50% to 190%, while South African firms were imposed with duties of 16% to 34%. The final ruling is due next year in March. Kumho P&B is Korea's only MIBK manufacturer in Korea, having sold roughly $27 million worth of the compound last year. Korea's media watchdog will investigate Google for allegedly collecting Android users' location data without their consent. Reports say Google can track a user's location even after disabling location services and removing the SIM card. The tech giant insists it neither stored nor used the information, but has agreed to stop collecting the data. Our Park Se-young has more.
The Korea Communications Commission has opened an investigation into Google's user data management practices, following reports that the tech giant has been secretly collecting users' location data through phones running on the Android operating system. Android devices make up around 80% of Korea's smartphone market. U.S. online media outlet Quartz found that Google has been collecting location information from Android users since the beginning of the year, even when their GPS settings were disabled. Location data were also sent from devices reset to factory default settings and even phones with no SIM card. Cell ID codes, which are data exchanged between a smartphone and a cell tower, can be used to determine roughly where a mobile device is located. Such information is used by the police to locate people in rescue and emergency operations. The media regulator said it will examine whether Google collected and used the location information of Android users in Korea without consent, and whether it violated the nation's privacy regulations. It will also cooperate with the US, the European Union, and Japan if an international investigation is necessary. Google Korea has admitted to collecting the data and said it will update the program to prohibit such collection of data. Park Se-young, Business Daily.
The wait is finally over. The iPhone X, Apple's newest flagship smartphone, has finally arrived in Korea. Sporting several new features, including Face ID, it's been receiving a lot of media attention around the world. And despite the cold and snowy weather, people waited in line all night to be the first ones to get their hands on the device. Our Park Hee-jun takes us to the grand opening.
Apple's 10th anniversary iPhone, the iPhone X, has finally been released in Korea this Friday. The anticipation behind the iPhone X was nothing like the somewhat lukewarm response to the iPhone 8, and this was apparent through the long line of people waiting outside.
Hours ahead of the iPhone X's official release in Korea, a long line of eager iPhone users has been formed in front of this Apple reseller despite the freezing weather. And this line is just one of the many lines across the country.
I came at 3 a.m. It's kind of like the biggest upgrade in quite a while, so there's many features to look forward to.
The iPhone X is the company's first all-screen smartphone that sports a 5.8-inch Super Retina display. It's also the first of its series to forego its staple home button, so users will now have to swipe from the bottom to change screens or switch apps. And of course, there's the Face ID. Replacing the fingerprint unlocking system, facial recognition now allows users to just glance at the screen to unlock their smartphone. Another unique feature is the Animojis, or animated emojis, that capture users' real-life movements through the TrueDepth camera.
I am extremely happy. I was here since 5 o'clock yesterday morning. I was going through a rough time, and this definitely makes me happy.
Although it's the most expensive iPhone to date, selling at over $1,200 for the 64GB model, it caused an online frenzy during the pre-order period. Major mobile carriers saw their 100,000 iPhone pre-orders sell out in a matter of minutes with over 300,000 orders. So far, it appears that the high price tag is not holding back iPhone fans from buying the iPhone X. The iPhone X is set to mark a new history for smartphones. Its popularity in the United States was incredible, and it's expected to be just as popular in the remaining countries that will soon release the model. Park Hee-jun, Business Daily.
Ahead of next year's Pyeongchang Winter Olympics, a commemorative long padded jacket is the one item that has been gaining the most popularity as we inch closer to the Games. Our Alec Kim has the story.
These long, down-filled jackets have taken over the streets of Korea. With the temperature quickly dropping and snowfall becoming more common, take a quick stroll in the city and you'll see plenty of people keeping warm in Korea's latest fashion trend.
Long jackets are in style, and this is down-filled and warm. I really wanted to wear one.
Of course, the quality comes at a price. A quick scan of a notable brand like North Face's website shows prices ranging from $275 to $450. That explains the overnight lines for the trendy, limited edition version sold by Lotte.
The quality is very good considering the price, and it's also a limited edition item for the Pyeongchang Olympic Games.
The padding is reeled down, not a substitute, but the jacket is being sold for just around $135. Customers began lining up outside one of Lotte's flagship Avenue L branches at 7 p.m. on the previous night, despite the store not opening until 10:30 the next morning.
I waited a long time, but it was worth it, and I'm glad I got one of these fashionable jackets.
Just 30,000 jackets were produced, and Korea BizWire reported that jackets have appeared in online resale markets at around $185, over 30% higher than the original price. This may provide hope for the Olympics' popularity with local Koreans. Of the tickets allotted for the Korean general public, a Bloomberg report earlier this month stated that only 22% had been sold. Elliot Kim, Business Daily.
Time now for a look through some important global business news from the week with Eunice Kim joining us in the studio today. Hello, Eunice.
Hello, Myung-gil.
Right, now the focus is on Europe today, in particular the UK. Now, the burden of Brexit is beginning to feel somewhat real, right, Eunice?
Yeah, absolutely, Myung-gil. Time is not on Britain's side as they dash to reach a divorce deal with the EU before the year is up. This week, UK Finance Minister Philip Hammond presented his autumn budget with an additional billions earmarked for Brexit expenses. Take a look.
A closely watched budget address out of Westminster. This as the UK just weeks away from a December meeting with the European Council, by which point both sides are aiming to iron out their divorce terms in order to begin the difficult second phase of trade talks in the new year.
We have already invested almost £700 million in Brexit preparations. And today, I am setting aside over the next 2 years another £3 billion, and I stand ready to allocate further sums if and when needed. Mr. Deputy Speaker, no one should doubt our resolve.
Westminster was bracing itself for a hard Brexit. The autumn budget that will fuel the state through these unprecedented times won broad approval from both sides of the political aisle, as it also included strategic plans to build a technologically advanced UK economy while providing supports for those struggling financially. Hammond was under no illusion that Britain would be able to keep up with the growth momentum of other major economies, including its largest trade partner, the EU. Pointing to an Office of Budget Responsibility report, he noted UK's growth this year would be slashed to 1.5% from the 2% forecast in March. No improvements are expected until at least 2021. The economy that had been upheld as among Europe's strongest lost its place among the global top 5, according to a third-quarter GDP forecast by the IMF. The fund said it could drop further as Brexit is worked out. A reflection of the grim realities of a looming divorce, as more coveted jobs this week were marked to leave London. The European Union announced relocations of 2 key agencies that will reopen outside of the UK days after Britain officially leaves the EU.
Based on today's voting, we selected Amsterdam to be the new seat of the European Medicines Agency and Paris to be the new seat of the European Banking Agency.
The happy winners of some 1,000 well-paying jobs that were up for grabs in a fierce EU27 race. The symbolism not lost on them.
And it's not just the EMA that sort of comes in and of itself. It's also that they will bring between 1,000 and 2,000 companies, in their ecosystem, in their economic ecosystem, that will also come to Amsterdam and do business here and grow our economy. It's a huge boost for everybody.
Well, certainly a Brexit dilemma indeed. Now, turning over to the EU, there's a significant concern there also as German Chancellor Angela Merkel faces an uncertain future.
Yeah, you're right. It's been a year with no shortage of political surprises, right, Myung-gil? Eurozone leaders were set to begin talks on how to relaunch Europe as a stronger economic bloc next month. But that plan put on ice for now, as our widely viewed de facto leader, German Chancellor Angela Merkel, looks far from certain to secure that fourth term. This is because talks to build a majority coalition over the weekend broke down when the liberal Free Democrats walked out of talks with Merkel's conservatives. Efforts are underway to break the impasse as we speak in order to avoid another election to build a formal acting German president. Merkel, though, has said that she'd prefer another election over leading with a minority government.
Right now, turning over to the U.S. next, many eyes are on the Federal Reserve and the likelihood of its third and final rate hike in December, possibly, right? Yes.
Right. So right now, as of now, markets seem to be pricing in that 0.25 percentage point rate increase when the FOMC meets on December 13th. But the path of further rate hikes in 2018 is becoming murkier as several members of the Fed expressed concerns that inflation may remain below target for longer, shifting from their previous stance that the drag on price growth was transitory. And it's a position that Chair Janet Yellen did address in New York this week.
We expect it to move back up over the next year or two. But I will say I'm very uncertain about this. My colleagues and I are not certain that it is transitory, and we are monitoring inflation very closely. And I'll go back to what I said earlier about keeping an open mind and not assuming you have a monopoly on truth. It may be that there is something more endemic or long-lasting here that we need to pay attention to.
And on a related note, Janet Yellen did submit her intention to resign from the bank's monetary policy setting board, not finishing her term as governor when the term of her colleague, Jerome Powell, who of course has been tapped to be the next Fed chair, begins in February. But his nomination is still subject to Senate approval. And finally, before I go, could this year's Black Friday be the last? America's tradition of standing in line all night for blockbuster in-store deals is on, but could be winding down. That chatter inspired by a National Retail Federation survey. It showed most, or 59% of all shoppers, plan to make their long weekend pre-Christmas purchases online this year, marking the first time a majority said they'll opt to sift through deals in cyberspace over big box stores like Walmart or Target. Although Americans are still expected to spend billions, as much as 4% more in November and December on year in brick and mortar stores on the back of easy credit and low unemployment, this could be a make or break holiday season for them. Already a record 6,735 store closures have been announced this year in the retail sector. That's more than triple last year's tally. The big winner that's likely to come out on top, though, Amazon. It's poised to enjoy a whopping 44% market share in overall e-commerce sales this year. That's according to researcher eMarketer Incorporated.
Well, lots of people will be itching to get a head start on their Black Friday shopping spree.
And we'll be watching those numbers coming in.
Sure, good for Amazon. Well, thank you very much, Eunice.
You bet.
And that wraps it up for today and this week. Thank you so much for watching, and we'll be back next week with more at the same time, same place for your Business Daily. Until then, goodbye.